Intangible assets are assets we can't physically touch. These include patents, copyrights, trademarks, franchises, brand names, and many more. A long time ago, a company could slap onto its intangible assets any old valuations it thought it could get away with, which made for some very interesting valuations and many shares. In the current era, companies are not allowed to carry internally developed intangible assets on their balance sheet, and that put an end to watering the balance sheet with fantasy valuations for intangible assets. However, intangible assets that are acquired from a third party are carried on the balance sheet at their fair value. If an asset has a finite life, as a patent does, it is amortized over the course of its useful life with a yearly charge made to the income statement and the balance sheat. An odd thing occurs with companies that benefit from a durable competitive advantage. Take Coca-Cola for example. Coke's brand name is worth an excess of 100 billion, yet because it is an internally developed brand name, its real value as an intangible asset is not reflected on their balance sheet. The same thing applies to Wrigley, Pepsi, McDonald's, and even Wal-Mart. Each of these companies benefit from having durable competitive advantage tied directly to its name. Yet the value of their greatest asset, their name, isn't recognized on their balance sheet. This is how investors were able to take a large positions in such visible companies like Coca-Cola with the whole world watching. Yet the whole world has no clue what and why they're doing that. Coke was too pricey to make any sense to the value investors that followed Graham, and its price wasn't volatile enough to be interesting to Wall Street traders. What Warren Buffett could see that no one else could was Coke's durable competitive advantage and the long-term earnings power that came with it. Earning power that over time would help make him the richest man in the world.